Yo, 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 what's up, guys? Can you guys hear me?
What up? What up? I hear you.
Sounds great, sounds great. I'm about to share my screen right now. Let's see. Boom. Can you guys see my screen?
Yo, yeah, yeah.
Sweet, sweet. Sounds good, sounds good. All right, so we'll just give it a couple minutes to wait for these guys to get on.
All right.
Had to get the shit the hard way. Came up, yeah, did it all way. I belong in the race like a stargaze. Welcome, Marlene. Welcome, welcome. Cool. Welcome, guys. Welcome, 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 welcome. All right, all right. How you guys doing? How you guys doing? Can you guys hear me? Can you guys hear me?
Yeah, we can hear you.
Yes, sir. Cool.
Cool, cool. Sounds good. Sounds good. Let me pause this guy. Cool. All right, all right. I'll go ahead and start in a couple minutes, like 2 minutes, 3 minutes. Who's got cryptocurrency though? Who's in those cryptos though?
I just saw one. I just saw Ripple went up, huh?
Sheesh, bro. Paying my bills for the year.
What? How you get with? How you buy Ripple though?
You have to so you have to buy Ethereum through Coinbase and then move your Ethereum onto Binance. That's what I do. And then you transfer your Ethereum to Binance and then you buy Ripple with your Ethereum.
Yeah. Okay. Okay. Yeah. Man, I just heard about this one called Doggy Coin or something like that. You ever heard of that?
Yeah, Dogecoin.
Dogecoin. Coin. Yeah.
Yeah, I've heard about that one. A really big investor actually told me to keep a lookout on that one. He said that one was a good crypto. I'm not personally invested in that one. I have money in XLM, which is Stellar Lumens. I've heard nothing but positivity on that one, and then I also have a couple investments in Tron TRX.
Yeah, I saw Tron too. I just saw that one.
Yeah, Tron right now is pushing right around 12, 13 cents.
Yeah.
You can see this big spike right here. This one's a good one. It's at like 10 cents right now. I got it when it was at like 3 cents. I bought it when it was like down here. So this one's definitely a good one.
So you can trade those too?
You can't trade TRX, not yet. I don't think it's on JFX yet. But they should be adding it. You can trade Ripple though. Ripple, Ethereum, and Litecoin on JFX.
Yeah, I gotta get into that. I hadn't watched all the IML videos yet. I just joined IML the other day.
Oh, cool,
Uh,
cool, bro, cool.
Actually on the first. So I've been trading personally, but I hadn't been. I don't know everything about how the IML go and how to use. I just barely know how to use the swipe thing, and I don't know nothing about the harmonic scanner.
Cool, cool, perfect, perfect. So I'm gonna go ahead and explain everything today in today's training. I'm gonna go ahead and get started in like 2 minutes. I'm just waiting for just to make sure everybody gets on, so I don't start in the middle when somebody gets on. So we'll start in like 2 minutes.
Cool.
All right, cool, cool, cool. So I'm gonna get started now. First things first, guys. Congrats on getting on this call, guys. Takes time out of your day, but you guys are all committed to actually learning what we have here. What forex is, or how to trade forex. More importantly, how to trade it, how to use the harmonic scanner that we have, and how to take advantage of it. Because definitely this is gonna be one of your great tools in your toolbox to use to get more confirmations on high probability trade setups. So first things first, guys, there is risk involved in trading. So do not trade with money you're not afraid to lose. So trade with money that you can afford to lose, because that takes away all the emotion. Trading is 90% mental, and 10% technical. So remember, guys, market moves on emotion. So you do not want to trade with emotion. You want to trade off of pure technicals. So here we have the harmonic scanner. To access it is imlharmonicscanner.com. Let me hide this real quick. Cool, cool, cool. So on the left side here, guys, we have our brokers. So you can click the broker. I stick with JFX. I don't really bounce from broker to broker. I found the best way is to just stick with one broker and just use one broker scanner. There's a 15 minutes here, and then the 1 hour and the 4 hour. With the 15-minute time frames, those are shorter period trade setups. And then with the 1 hours, 4 hours, and daily, those are, of course, little longer term setups. Longer term, they take to play out. Give me 1 second. Josh wants me to record this. Cool, it's recording, I think. Yeah, there it is. Cool, cool, cool. Cool, yeah. So with the 15-minute setups, guys, we can go ahead and click on each pair. And I'll show you guys how I analyze it and how you should be analyzing it, to get those confirmations so you can feel confident entering the trade. So that way, you can take high probability trade setups. Harmonics are 80 to 90% profitable, especially when you're especially when you're in a downtrend. So for example, when you're in a downtrend and a harmonic pattern pops up and it's signaling you to sell, those are going to be the most highest probability trade setups because you're already following the trend. If you guys are taking notes, the trend is your friend. So you want to take trades that follow the trend. You never want to go against the trend. So for example, the first example here, is GBP NZD. You can see at the top left corner, it's on the 15-minute, and it's calling out a bat pattern. As you can see, this is a good example as what confirmations you should be looking for. The entry point was up here. You can see it's it's downtrending. It's starting to downtrend. And the confirmations you want to look for are these here. Let me type it out. Cool. So number one, you want to look for the trend.
I got a question for you real quick.
Yeah, what's up, bro?
I always hear people say the trend is your friend, but I mean, when you finding your trend, what are you finding it from?
Where are you finding it from?
Yeah.
So for the 15 minutes, like I said, they're more shorter term trade setups. So for example, if we zoom out, we can overall see that from the left side, it's kind of moving sideways, but overall it's kind of moving down. You see it popped up here and it made this big run up and then it started coming back down. So with trends, if you zoom in right here, you can see that you got this trend line. You got this trend line right here. You got another one right here. Let me pull it up on, what I like to do is I like to go on TradingView. So I don't know if you guys have used TradingView, but I like to go on TradingView and look at the actual pair on here because it's a lot cleaner. So GBP NZD, for example, we'll pull that guy up on here. Cool. So with the smaller time frames, one second. So with the smaller time frames, you're looking at smaller trends. You're not really identifying the bigger trend if you're going to take more shorter term trades. You got to identify what time frame you're going to be trading on, because you're going to be trading on a daily and it's uptrending and you're going to be swing trading it, it's going to give you different confirmations on different time frames. So for example, if we on this daily, you can see that the GBP NZD is sort of uptrending, is of course uptrending. And the way you identify is, drawing trend lines. So you got 2 points right here, and then you got another inner trend line right here. It did break. So if you guys can see, so we have, So we have 1 point right here where it touched, and then another point right here. And then it broke right here. It broke this point right here. So with this, it's starting to look like it's starting to come back over. So we have 1 point right here. We have another point right here. And then we have a third point right here where it broke. It broke and it retested right here. So we can expect this to start coming back down. So if you start breaking it down, I like going from the daily. I look at the daily and then I start breaking out to the 4 hour. So we can see that this guy came up. So it's uptrending right here. There's another trend line right here. So if we go from right here to this guy right here, so we can see that there's another trend right here. So let me copy that. Boom, point right here. And then we got another point right here. So this is an uptrend, correct? Because we have 3 valid points on a trend line. More than 2 valid points is a trend line. So if you have 2 points, that's considered a trend line. And then you always want to wait for that third test. So right here, that third test, you could have gotten in as a buy right here with the very low risk. Of course, right here on the fourth time it was going to test, it broke through. So it broke through. So now, of course, when you break a trend line, now that trend line becomes it becomes resistance. So this was a support trend line. It broke it and now it became resistance. It rebounded right here. This other retracement didn't quite make it all the way to the top. But you can see that we have another trend line, the other trend line right here through this point here. So it broke that trend line as well, and it retested right here. Can you guys see that? Does that make sense?
Yeah, I see what you're talking about.
So it retested right here. It retested, and then now we're downtrending, right? So now we broke these trend lines, and now it's starting to downtrend, correct?
Yeah.
So boom. So 2 valid points is a trend line. So there's a big trend line up here, and then if we go from this point down to here, this one's not so good. I don't really trade GBP NZD because it doesn't really like it doesn't trend as well as I like it to, as the other pairs. But I was using this kind of for an example as what to look for like confirmations. So for this 15-minute, I look for the trend, right? So we look for the trend. So on this 15-minute, it's starting to trend down because, like I said, so these candles represent 15-minute, right? So each candle represents 15 minutes. So this is 15 minutes. This is 15 minutes. This is 15 minutes. So this is 1, 2, 3, 4, 5, 6. This is 6 candles. So this was like about an hour. So this took about an hour and like 30 minutes for it to complete. And you would have caught. This is more for intraday trading, you know, for day traders. You would have caught right around 56 pips. 50 pips. Third take profit was 50 pips. So that was a quick sell, and you would have, of course, seen that there's a 15-minute downtrend. It pulled back a little bit, and it called the harmonic on it. And another thing you want to look for is previous support and resistance. So number two is identify support and resistance. Cool. So if I like doing zones. A lot of people just do lines, and for me, quite frankly, I found better, you know, to identify a zone. To identify a zone, like right here, for example. So this is support.
Yeah.
So this was once. Let me see if I go back here. If we can identify more points. So if I bring this guy all the way over here. So you can see that this was a pretty good area of first resistance, and then it became support. And then now it's resistance again, and then it touched right here again. And then now it broke it, and then it became support.
Mm-hmm. Now it's back at resistance, huh?
Yeah, and then now it's back at resistance, right? So with this harmonic scanner, we look for the trend. So we see that it's starting to downtrend. We see that it broke previous level of support, and it now retested it as resistance. And we see that the harmonic scanner, the harmonic scanner called out a pattern here, and our entry point was right here, which was previous level resistance. And then the third step is identifying the divergence. And what I mean by divergence is a really good, easy way to put it. Let me move this guy to the side here. Cool. So what I like to do is, let's zoom in. I get my vertical line. So right here on the left side, you know, you have your tools, your drawing tools. From X, so from the X leg, from X point, I draw a vertical line, and then I go down here. This down here is called your RSI, your relative strength index. This lets you know if it's getting overbought or if it's getting oversold. If it's getting overbought, then that means, you know, value is increasing, meaning that it should start coming back down because value is it's overvalued. And then when it's oversold, that means that it's undervalued, and value needs to start coming back up. So we draw another vertical line to the D leg, on the D leg, the D point, and then we go back to the RSI and we draw another vertical line down here. And you guys see how I separated this little zone right here from X to D. So what you do is you get your trend line. So you get your trend line and you draw a point from X to D, right? So this is downtrend, right? And then you go from your RSI, which I already have it down here. You go from your RSI right here, your RSI point from X to D. Come on, guy. All right, so I have it drawn down here. But you see how from X to D, you see how this is uptrending and then this is downtrending? That, my friends, is called divergence. That's called divergence. So when you look for a trend, when you identify a trend, when you identify that it's trending down and it's the pattern is signaling a sell, and then you identify your previous support areas and resistance areas, and then when you identify divergence, you now have confirmations, you know, that it's signaling a sell, that it's a good sell. So for this example, you know, you would have confirmed these confirmations here, and it would have came through. You would have caught about 50 pips, and it would have been like pretty much zero drawdown. So let me go to a different example. Let's look at one that hasn't played out. I don't really like my main pairs personally are like the USD CAD, USD JPY, like this one right here. This USD JPY was beautiful, 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 beautiful. We can go over that as well. This is a little bit bigger pattern. I think they have it on the 4 hour too, or on the 1 hour. Let me see. Yeah, it's on the 4 hour. All right, so let's do our confirmations. So let me go on here on my trading view. Let's go to USD JPY. I already have that drawn up. Another thing too, guys, is you want to draw your levels of support and resistance. I do that on a daily time frame because you identify your turning points. You identify, where your daily support is, where your daily resistance is, and this is going to give you higher probabilities because you know that those areas are very, very important. So right here, I have the USD JPY on a daily time frame. I have all these. Here, let me go on a 4 hour. Breaks it up a little bit better. Cool. So if you guys can see right here, all my these blue zones right here are my support and resistance. And then these yellow dots right here are where it actually touched that area. So if we can see right here, this top one, of course, we are overall kind of downtrending. From the top left, we are downtrending. It did break our counter trend line right here. So this is uptrend. Again, we have 1 point right here, 1 point right here, and then another point right here, and it broke through. So this is now considered a downtrend. This is what's called the counter trend line because this is overall downtrending. This is a counter trend line. When it breaks your counter trend line, that's signaling you to sell. We see all these points right here. So this is a very good area of resistance. So we have 1 point right here, 2 points right here, 3, 4, 5, and it broke free. So on the swipe trade, I don't know if you guys still have it pending. It's still pending. And they say on the swipe trade, they're predicting it for it to come to the 11300 right up here somewhere. Quite frankly, I don't see it coming all the way up there. Just because we have all these levels right here of resistance. We do see right here, if we zoom in a little bit, these are all 4 hour candles. So on these 4 hour time frames, you definitely get a bigger perspective of, where the market's heading, where are all the reversal zones. So these are all technically reversal zones. So we see right here how it rejected this area. You see how right here rejected this area. So I actually got in the sell yesterday right here. It broke through. So it rejected it right here and it consolidated. And then this candle broke through and it rejected, popped back up here, retested it, and then it did a big drop. So if you were in the sell anywhere around here, you'd have made really good money with really good risk.
What would you have entered that trade at?
What do you mean?
If you would have entered that trade on the sell, before the long candle going down, what would you have? Okay, you see it broke right there. It broke the trend line right where you are.
Correct.
What would you have entered that trade on the sell?
So you could have done one of two things. You could have entered the sell after this candle closure right here. You could have entered the sell right here, or you would have waited for the second candle. And if this closed bearish, you would have entered the sell right here, and you would have put your stops. My stops personally are 30 to 40 pips. So I would never have a bigger stop than 30 to 40 pips. So for this personally, I would have entered it right after the candle. So you'd have entered it right here. And you would have like a 30 pip stop, 35 pip, just to be safe, 35 pip stop loss. And, you would have still caught in that sell. Or what you could have done is you would have waited, because what I've seen markets do all the time is they retest. Markets retest. So this drop, and you could have waited for the retest. And you would have waited for the retest. And you don't have to watch. One thing too, a lot of traders think that they have to watch the markets. I use a lot of sell limits. So for example, right here, you could have used a sell limit. So sell limits work wonders. Sell limits really work wonders, because you could have put your sell limit right here, your stop, your take profits and everything, and it would have popped up, retested, put you in the sell limit, and it would have dropped. Instead of you having to wait and watch all of these candles close and you just anxious and watching the market, just analyze the market. You know, if the market's going to retest, it can retest, put you in the sell, and then you can expect that drop, and you're only risking 30 pips, 35 pips. And in this example, if you would have caught it to the next area of support, which is down here, you would have made roughly 66 pips, 65 pips. That would have been a 1 to 2 risk to reward ratio. So you'd have been risking $1 to make $2. So whenever you have a 1 to 2 risk to reward ratio, that's a very great trade. So back to the harmonic scanner. So we have USD/JPY. So we did see that it was on a downtrend. We have our areas of resistance right here. So we do have our areas of resistance. We could even go back a little bit more. Cool. Can you guys agree that this is starting an overall downtrend now?
Yeah.
Cool. So on this harmonic, so we identified our downtrend. We identified our resistance. This is previous level resistance. So now this is doing like kind of a little double top. If you guys know your patterns, this is forming a little double top. We have the neckline right here at the bottom. So we have another area of support. If this breaks this support down here, the 11200, then we can see way more downside. Just because this 11200 is a very psychological level. Anything that's a rounded number is a big psychological level. Again, because remember, guys, the market moves off of emotion. So the market moves off of emotion. 11200 is a very psychological level. We see it. We have another little downtrend right here. Boom. All right. So imagine we didn't have any of this. And we're just watching it right here. Where is my RSI? Cool. Cool. So then, again, we draw our vertical lines from X. So X, we go on the RSI, the relative strength index, draw another vertical line, D leg. So D, then we go on the RSI, another D, another leg. And then we get our trend line. So from X to D, it's a downtrend. And then from X on the RSI to D, it's a little bit uptrending. So this is still considered divergence. Do you guys see that? Do you guys see how it's opposite trends? So on the chart, it's downtrending, but on the RSI, it's uptrending. So this is called divergence. So every time that happens, I've seen it over and over again, especially with these harmonic patterns. It's crazy how accurate they are, that when you start following these rules and you only take trades. So this is a big thing where I see a lot of people fail. So if you guys are taking notes, make sure to write this down. So first of all, you want to be using the same consistent lot size. You want to keep using the same consistent lot size, because if you don't, if you have 0.10 here or a 0.50 here and you take a loss and you take an L and you don't have the enough balance to keep risking the same consistent lot size, you guys are then going to start being positive on pips, but negative on money. And that should never happen. You should always keep your consistent lot sizes. That way, at the end of the day, you're only counting pips. If you can make pips, if you can catch pips, you can make money. So you want to keep your lot sizes consistent, and you want to follow your trading rules. So you want to follow the confirmations. You want to look for support and resistance, and you only want to take trades that fall in line with these confirmations, because if you don't, then you'll start trading off of pure emotion. And when you start trading off emotion, you lose money 100% of the time. I've been there. I've done that. I've been trading for about a year and a half now. So I've been trading for a while now. And it's just, I see it over and over again with a lot of people, And I've been through it myself too. I've been through it myself where, I trade big lot size and, I lose money. And then the next trade, I lower my lot sizes and I end up catching more pips, but I'm still down on money because I risked a higher lot size on my previous trade. So as long as you stay with the same lot sizes, stick with the same lot sizes, follow the trading confirmations. You guys will make money. You guys will make money, and be patient. Just be patient. Wait for the setups. Don't be trading. My mentor told me, you do not have to be trading every single day. Sometimes the best trades are no trades at all. So you don't want to force any trades. You don't want to force any trade setups because the trades will come. The trades are always going to be. There's always going to be new patterns. There's always going to be new trade setups. You don't want to force anything. But you want to keep on top of your trade. You want to keep on top of your trade. You want to keep on top of your charts. I don't know if you guys have already selected, one currency pair or two currency pairs to follow, to really, really study, because that's where you're going to see a lot of success. Instead of trying to study all these different currency pairs, exotics or whatever, focus on one or two pairs and study that pair like it's the back of your hand. Because once you do that, you're going to have these levels right here, and you're going to be able to get into buys and sells on one currency pair, and you only need one currency pair to make a lot of money. So I don't know why I see a bunch of people just trying to get into a bunch of different currency pairs. Just stick to one, two, or three maybe. But yeah, guys, stick to one currency pair and just study it. So back to the harmonic, guys. Sorry, I get off track a lot, but back to the harmonic scanner. So this is Euro JPY. So let's look at Euro JPY on TradingView. So the harmonic scanner for me, guys, is mainly just another confirmation. I don't think of it of just a copy and paste. Every time it pulls up a trade, I don't just copy and paste it onto my phone. I make sure I do my analysis on it, because at the end of the day, we're playing with our money, right? We're risking our money, our capital, and we want to protect our capital as much as possible. So Euro JPY, looking at Euro JPY on the 4-hour, we do see that we have like this little uptrend right here. It's making higher highs, higher lows, little consolidated right here, broke this little consolidation, which is our weekly resistance at 134,500. So if I go on the daily, you can see a little bit better. I actually called out this trade too to one of my team, to a couple of my team members. You see here on the daily that we have this big area of consolidation. This didn't move anywhere. It just moved sideways for about a couple weeks since September, and it just broke out. So as you guys can see this, I'm expecting a lot more upside on Euro JPY. They did call it out, I think, on the swipe trades, but I think it missed our entry. It is on the harmonic scanner as well. And this is another great trade that you could have taken. Let's do our test. Let's run our test on it really fast. Let me erase this trend line. Let me erase this real quick. Cool. So we'll get our vertical line. So we'll go from X leg, RSI, X leg, D leg. So boom, D leg, and then DRSI. And then you get your trend line from X to D. Boom, another divergence. Do you guys see that? Do you guys see how X to D right here is on an uptrend, and then on the RSI it's on a downtrend? And you see how it's starting to be oversold? Whenever it gets past these areas down here, that means it's oversold, and whenever it goes up here, that means it's overbought. So do you guys see that divergence? So that right there is going to be one of the biggest confirmations. Divergence is one of the biggest confirmations. And again, so now we have a great confirmation on the harmonic scanner signaling a buy, and then we also broke out right here, which if you go down to the smaller time frames, the 4-hour, we can see that this is on an overall uptrend, and it broke free and it rejected. So if we zoom in right here, remember guys, this is the 4-hour. So these bars really mean a lot. They have a lot of data in them. You know, they have a lot of data in them. So right here in this area, so we see that it touched right here. We see that it made this first initial break right here, rejected, bearish candle, and it just kind of started moving sideways. It did break back down below, but if you guys see right here, I don't know if you guys have moving averages, or if you guys gone through the training. I know they have a training on IMO Academy that explain what moving averages are, and how they work, and how you can use them as another indicator to your trading. But if you guys can see right here that these moving averages were pointing straight up, and this candle right here came all the way down, it wicked this moving average and it rejected it, and it just started moving sideways from here. And then this next candle, so there was no confirmation here. It was just all moving sideways. You could have entered a buy, so you could have entered a buy anywhere around here, and we can see what our risk would be. So at the end of the day, guys, you want to make sure if you're risking more than you can potentially make, you know, it's not a good trade. So at the end of the day, you want to have good risk management. So we could have entered, say we entered the trade up here. So see how this was about. This would have wicked us out. This would have took us out at 70 pips. So we would have been risking 70 pips. So that for me wasn't a really great confirmation. You could have entered actually on this retest right here. You could have entered on this retest, and you could have risked 30 pips on it. 30 pips on it, which if we go back to the harmonic scanner, it called it out at 134.7704. So 134.7704. So it called it out up here somewhere. So let me see what time it called it out. 103.11. Oh, it just called it out. So the harmonic just called it out up over here. So 103. Oh, the harmonic scanner actually just called it out right here somewhere. The 1 hour called it out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Called it out about 15 hours ago. So that is right around here. So the harmonic called it out right around here. So if we draw our trend line from right here to right here, because we got valid points, again, for a trend line, you only need 2 valid points for a trend line. So if we draw our circles right here and we find our points, so we got 1 point right here, another point right here. And if we see right here, this is creating actually a bullish flag too. So this was actually creating a bullish flag. So we got this big run up, right? And then we got this consolidation, and it started doing this little bullish pattern. Right here, there was pretty much no real confirmation of whether it was going to reject or whether it's going to break through. Until we started seeing these big candles. So we started seeing this big green candle broke through again, and then we started seeing all these rejections, and we started seeing the moving average start pointing up as well. So we started seeing that it started rejecting this area, which is the weekly resistance at 134,500, which now became support. And we can see that with these wicks right here. It wicked it away, and it stayed away from it. And now that it made this big run up, it made a pullback, and that's when the harmonic scanner called this pattern out, this Gartley. So does that make sense to you guys? So we got this 1 point right here, second point right here, and then we got this point didn't quite make it, so I'm not going to count it. And then we got this third point right here. So that's literally where the harmonic called it out. Zoom in. So we know, so all right, so back to imagine we didn't have all of this data. Imagine we didn't have all of this data, and we see that the market came up here, and then the next candle formed, and then that's when it called it out. On this candle is when it called out this harmonic scanner, when it called out this pattern right here. Again, we see that this was once resistance right here. So again, we could draw it on this chart as well. We can see that that was resistance. It came a little bit below. here.
Hey, when you say the harmonic called it out, what you mean? What you mean? The harmonic called it out?
So I just mean that the harmonic scanner found that pattern, at that time. So
Oh, okay.
I don't necessarily mean that it um literally called it out, but if you would have hopped on, if you would have gotten on the scanner at this time, it would have popped up, and it would have popped up as a new pattern, which it would have popped up like how we see it right now. We wouldn't have seen those other data points. So
Oh,
we would have
okay.
been we would have been looking at it like this without seeing the other points. So then
Yeah.
now this is when we would have made our analysis, right? We would have made our analysis. We would have waited for the next candle. We would have seen a bullish candle. We would have done our three confirmations. So we would look for the trend. We see that it's uptrending. We see that it broke previous area of resistance, which we identified here in this area right here. We see that it broke, correct? It broke. You guys can see that it broke, right? And it started
Yeah.
retesting it, and it didn't break back below.
Yeah.
And then the harmonic scanner, that's when it popped up. That's when the pattern popped up.
So
Because
it pops up. It pops up after a pattern completes.
what's up?
I say so. The harmonic scanner pops up after a scanner after a pattern completes.
No. The harmonic scanner pops up as it pulls back, and as it finds those ratios. See how you see these ratios right here? These
Yeah.
0.82, 0.638, 0.776, 1.23. So those are specific ratios that the harmonic scanner automatically looks for to find a trade. And what we want to identify is if it's uptrending, and if it's a valid pattern. So on this one, this pattern popped up, and we could have watched it when it popped up, and we'd have been seeing it how we see it right now on the screen.
Yeah.
And we would have looked for those confirmations. So we would have looked for if it's in an uptrend. We would have looked for if it's testing support or resistance, and we would have looked for this divergence. So it followed all of our three rules. So it followed, our confirmations. It followed our confirmations, and it's in profit right now. So it's about, let me measure it. Say you would have got in right here. Say you would have got in right here, not even at the entry point. You would have been up around 40 pips, 47 pips, 42 pips.
Mm.
So does that make sense, bro?
Yeah, I see what you're saying. I see what's going on.
Cool. So yeah, guys. So that one would have been an uptrend. I still see this going up, to be honest, because if you guys look at the daily, so the reason why I see it going up more is because on the daily it consolidated for so long. It consolidated for about 3 months now, going on 4 months. It consolidated for so long, and when it broke up, it finally broke up to the upside. If you guys
Yeah.
see here on the daily time frame, if I zoom in, you guys can see that the moving averages here are still pointing up. They're still pointing up. So what this might do, this might come back down, retest again at weekly resistance one more time. And what I would do, what I personally am going to do is I'm going to set buy limits at this area. I'm going to set buy limits so that way if it does come test, I don't even have to watch my charts or anything like that. I'm, of course, going to keep on watching them to monitor this trade. But you don't have to be actively watching, waiting to get in at the right time or anything, because you want it to retest. You want to find that retest, and you want to get it at very, very, very low risk.
So it's like turning that area right there to a support now, right?
Correct. So now it was once resistance, and now it turned support. Now it turned out support. So now we're expecting another retest. And retest that support area at 134,500.
Yeah.
134,500. That's a big rounded number as well. That's a nice rounded number. All right, so let's go to another one. Let's see if we can find a trade. I was actually looking at the USD/JPY for the swipe trade and the GBP/JPY. Those swipe trades were like those swipe trades are for me very, very, very great trades. Just because I've been watching the USD/JPY, and I've been seeing more weakness in the dollar. Let me find a trade that we can see that hasn't played out already. GBP CAD. Oh, this one. All right, for sure. All right, guys. So this is one that doesn't follow our rules. So let me show you, why I would not take this trade. If it doesn't follow your rules, don't take the trade. So we'll draw our vertical lines. So you guys see that how this is downtrending on the harmonic, and then on the RSI it's also downtrending as well.
Mm-hmm.
So for me that for me is not an extra confirmation. So I'm gonna stay away from this one. I'm just gonna not even trade it. And that's what you want to do. You just want to look for trades that follow all of your confirmations, that follow all of your rules. Because at the end of the day, you want to trade like a robot, so that way you can keep having the same results, the same results, and then the same rules, same structure. You want structure in your trading. All right, let's check it out. Dang, there isn't any trades, bro. We already checked that one out.
Hey man, so with like the different brokers, is it gonna change?
What's up?
So like, you know how you have like 5 different brokers on like the left?
Yeah.
So we look up like, let's just say EU on the different brokers. Is that gonna change like the harmonic pattern and things like that?
So I have seen that. I have seen some currencies do that where like it shows a different pattern. Or but I personally just you can use them. You can find which one best suits you. I've seen the best with JFX. I've had the best results with JFX. I don't really I don't really touch the other ones, to be honest. Traders Way, I've heard nothing but bad things about their price manipulation, so I stay away from Traders Way. Pepperstone, I've never really heard of them. I've heard of XM and Hot Forex, but I mean, I honestly don't even use those. I just look at JFX. But there really isn't any trades, guys. There really isn't any trades right now. Let's look at USDJPY again, because this is as a swipe trade. Let's look at GJ. Are you guys fine with looking at GJ and UJ for the swipe trades?
Yeah.
Cool. So this is GJ. So this big one right here, this big one that I have right here is my analysis and what I was expecting GJ to do before the swipe trade came out. So if we go on the daily, let me zoom out a little bit. Cool. So we have GJ on a pretty big uptrend right here. If we go on the weekly, weekly. So this overall, it's overall on a big fat sell-off, and it's starting to pull back. And this one is a really good pattern. It's a descending triangle or a descending flag, if you can see that. So we zoom in. So on the weekly, we know that it's starting to pull back a little bit. If we go on the daily, I have my level set up. So on the daily, we have a level of resistance right here, and then another level of resistance right here. We can see that it retested once right here, and it rejected once again right here. So I was expecting another retest right here. Then I had my sell limits right there. I was expecting a retest. Let me see. So yeah, I was expecting a retest. The swipe trades, Gustavo's wealthy pips, he's expecting it. So if I go on the little smaller time frame, he's expecting it to come up to the 152 400 area. So it's like kind of by there, kind of wicked it. And let's see why he was looking at that. So this is the 4 hour. So again, we have an upwards trend line. So we have an uptrend line, which is a counter trend line. We have 1 point right here, another point right here, and a third point right here. We can see that it kind of broke it, and it's now kind of retesting the trend line. So we'll wait on this next 4 hour candle to close. I'm still expecting it for another little retest up here. I feel like this is a little false breakout. Expecting another retest up here, retesting the highs, and then another drop, and then a drop below. Just because we have all these points up here. So we have all this area right here, which is resistance. If we go back a little bit, we can see more areas of resistance up here. And you see how it just dropped. Right here didn't even make it all the way to the top, and it dropped. Right here made it to the top, and it dropped. Right here made it one more time to the top, and it dropped. And then right now it's making its way back up to the top. So we can make another assumption that if it hits the top, it's going to come back down. Looking at the RSI down here too, we see that these areas over here, these guys are overbought. So right now where price is currently, it's sitting right in the middle. So I'm still waiting for it to come up more, waiting for it to increase in value, being overbought, and then hopefully putting us in that sell limit. And then back to UJ. This one again. So the swipe trade is expecting for the short right up here to the 11300 area.
Mm-hmm.
But for me, I don't. It might come up here and might wick it like right here. But I see there's more valid points for me right now where it's currently sitting. So if this does break this area right here and it retests it, we might see another push up to the 11300 area and then continue to drop. If you guys pull your fibs, I don't know if you guys use Fibonacci. For the people that understand it, you can pull a fib up here from the high to the low. I use the average of the wicks. So from the high to the low, we see that the 11300 area is right along the 61.8. So I feel like that's what Gustavo Wealthy Pips is basing his setup on, the 61.8 area, which it falls in line exactly with his entry point on the 11300 area. So for this one, I'm still expecting sells. I'm expecting sells for the rest of the week. We do have NFP. So another thing, guys, you want to make sure you want to look at your calendar, your economic calendar. That's going to give you a very, very big insight on whether there's going to be big news, whether there's going to be a big fluctuation in the market. Like for example, this Friday, tomorrow, Friday, we have NFP, non-farm payroll. So that is pretty much, they come out with all the unemployment and everything within the whole U.S. So that definitely creates a lot of volatility in the market. So you guys want to be very careful. You guys want to be very, very careful trading NFP. I would stick with using the low lot sizes, the lowest lot sizes you guys can use. To a lot of people don't trade NFP because they feel like it is a gamble. But if you guys study you go to forexfactory.com and it gives you the whole economic calendar, forexfactory.com. You can click on these little envelopes and you can actually go to the source. So you can go to like the latest release and you can actually read the numbers on it. So you can read whether the US dollar is strengthening in value, whether it's decreasing in value, what's going on with it. You're able to see pretty much everything in here. And that ultimately, affects the value of the currency. If they have bad news, they don't have any good news on the economy or the US dollar or employment, then we're obviously going to see that the US dollar is going to weaken. And also, we do see that it did break this trend line right here, this upwards trend line. So, technicals are technicals for a reason. So a lot of investors just look at these technicals, right? So they do see that that it broke down. So it broke down this trend line. It's now retesting. So a lot of people look at that when they trade NFP too. So a lot of people look at technicals when they trade NFP because most of the time news falls in line with technicals. Like if there's a setup that's setting up, you would see that when news comes out, you would see it play along with your technicals. I wanted to see if there's no trades on here. NZDJPY. All right, so this one's pulling up. Let's see. It's on the 15-minute NZDJPY. Let's check that one out. NZDJPY. Cool. So this one is uptrending on a 4-hour. Let's look at the daily. Daily, it's downtrending.
Hey, which time frame do you take your trade from?
So I do my analysis on the 4 hour, and I most of the time, like 90% of the time, I just set sell limits and buy limits at support and
Yeah.
resistance, to be honest.
Mm.
That's
Seems like that's
honestly,
the safest way right there.
yeah,
Well,
yes, that's honestly what a lot of investors do, because you see like these points, like that's what a lot of people do. That's why you see when in certain areas, that's why you see rejections, because a lot of people have their sell limits right there at the level of resistance or support, and as soon
yeah.
as it hits that level, it puts everybody in their sell limits or buy limits, and that's why price gets rejected from that area.
Mm.
So on NZDJPY on the 4 hour, we can see that we have this uptrend right here. So we have this outer trend line is what I call it. You had an outer trend line, and then you got your inner trend lines. So we have one point right here. It did break it. I think there's actually a bigger trend line on the weekly. I think one of my friends would send me. Yeah, there is. Cool. So boom, right here. So this is the weekly time frame. So this is the weekly time frame. This gives you a bigger overall perspective of where the market can be heading, for the next week, 2 weeks, month even. And we
Yeah.
can see that this is uptrending. So we got these big points right here. We got these data points right here, and we can see that it's uptrending. And you can see that right here that it broke through and it retested and it dropped. Dang, this thing dropped. This thing dropped 200 pips. 200 pips, bro. So cool. So this is the weekly. Let's go to the daily. Let's break it down a little bit. Cool. So we have these valid points right here that create this valid trend line, this valid uptrend. We can see that it broke this trend line right here. We can see that it broke it right here. It came up and it retested. So again, you could have had sell limits right here.
Yeah.
For example,
Like once it break the trend line, you know it's coming back from where it broke the trend line, and then you can put your sell limit right there.
exactly. So say you would have put your sell limit right here, but this is on the daily. This is a much bigger time frame. You would have gone on the 4 hour. Remember, with bigger time frames comes bigger risk, because you have bigger stop losses.
Yeah.
Because you want it. What I like to call it is you want the market to breathe. The market moves up and down. It's never going to move in a straight line. The market moves up and down. So you want the market to breathe. But you want to put your stop losses above the previous high. So for example, right here, this is the 4 hour. Let me erase this guy. All right, cool. So this is the 4 hour, and we see that on the daily, it broke this trend line, and now we're watching this area, right? We're watching this trend line, right? Because we see that it already broke, so now we're waiting for the retest. So we see that we have this area of consolidation. What I would have done, identify first that we have the consolidation. So let me get my little rectangle. So you identify the highs. So the high of this consolidation is up here, and then the low is right here.
So that's why you say you do zones then.
Exactly, because it never moves in. It's never going to go to one point, and reject. You're never going to get that perfect entry. You're never going to get that perfect entry. It's very hard. It's very hard to get that perfect entry. Most of the time, you're just lucky. But for example, we have this. Could have done like right here, and then we have this previous area right here too. So boom, this area of right. This was support. It broke through and it became resistance, right?
Yeah.
Broke through the trend line. So now this trend line and this freaking area of resistance is now a very good valid point. So now this is starting to move sideways, consolidate. What I would have done in this case is I would have put my sell limit up right around here somewhere. Up right around here, where the highest high is at. And then I would have put a 30 pip stop, 40 pip stop, 35 pip stop. You would have put your sell limit, and you could have caught it to this area. Your first target would have been this area of support, and then your second target would have been the second area of support. So that would have been 197 pips. The first target would have been 82 pips. So you're risking 35 pips to make 82 pips. So, is that a justifiable, setup?
Yeah.
Of course it is. Of course it is, because you're risking $1 to make $2. It's a 1 to 2.3 risk to reward ratio. And then, you know, you could have, once it was in profit, these 80 pips, you could have moved your stop loss to break even, and now you have a risk-free trade and you let it ride.
Mm-hmm.
So that's going to be honestly one of the biggest keys too, is once you're in profit, write this down. Once you're in profit, 20 to 30 pips in profit, you want to move your stop loss to break even. And that is now considered a risk-free trade. Risk-free trades are the best trades because you're not risking any money.
Yep.
So my biggest advice, guys, is, you know, do the confirmations, use the same lot sizes. So if you guys want to write the confirmations down, let me find out where I wrote them. Did I write them? Nope. I think I wrote them on your JPY. Nope. So the first confirmation, you know, is identifying the trend. So identify the trend. Second confirmation is identify the areas of support and resistance. And then the third confirmation is identifying a divergence. Where is it? I think erased. So identifying the divergence, divergence. And then also use same lot sizes. So find a lot size that you guys are comfortable with, that's comfortable with your account, that won't blow your account. So stick with the same lot size. And also, you know, follow your trading rules. Follow your rules. That's going to be the biggest thing when it comes to trading, you know, following your rules. That's going to be the biggest thing. You want to treat this like a robot, and you want to treat your trading like a $1 billion business, because it can make you a lot of money if you treat it like a business. But back to this harmonic scanner, the NZD-JPY we're doing. No. All right. So we see it break this zone. So it started moving away and it started dropping. And now we see this uptrend. So now it's starting to, you know, pull back, uptrending. And we see it again now moving on this trend line. So now it's on this trend line. So the harmonic scanner is calling a sell on the 15 minutes. So right now we're on the 4 hour. We can go down to the 1 hour, see it a little bit better. So it broke up. So it broke the trend line. It broke it to the upside. And now it broke it back to the downside. And now it's breaking back towards the upside. The moving averages are pointing up still. And this is overall an uptrend on the 1 hour. It's freaking uptrending like crazy on the 1 hour. So for this trade, I would stay away from it. It's going to 15 minutes.
And down there it's your divergence now.
What's up?
When you're doing your divergence on it, what would it look like?
All right, so let's look on the divergence on this guy. So we draw a vertical line from X. So vertical line on D, vertical line on the R side. The trend line, so from trend line from X to D. So on this one, it's kind of diverging. Not yet, because this candle hasn't closed yet. So you want to wait for more candle closures in this one. But overall, I would stay away from this trade, because we do see that it's still uptrending. It's still making higher highs, higher lows. If you can see right here, it's making higher highs. So we got a high right here. We got a high right here. We got a low right here.
And that's the high and low, right?
Yeah, then we got another low right here. And then this one's potentially making another high right here. On the 15 minute, since it's doing these lower lows, lower highs, or higher highs, higher lows. Sorry, higher highs, higher lows. we can on the 15-minute we can expect a slight pullback, but I mean it's uptrending, so I wouldn't sell when it's uptrending. Again, like I said, you know, the trend is
Yeah.
your friend, so I
Yeah.
wouldn't sell on an uptrending market. I wouldn't catch the pullback. That's
Yeah.
not me, because you know I don't like doing that. I don't like selling or buying against the trend. So for this example, I would just stay away from it. I would just stay away from this trade and find a
Yeah.
better trade. And I personally like trading on the bigger time frames too, because it's I don't have to like watch it or anything like that. Like I can do my pips. I can manage. I can calculate my pips, so calculate my risk and calculate my profit, my take profit, and I can just let the trade ride out. You know, for the next day, for the next 2 days, instead of doing these intraday trades, I can just let
Yeah.
it let it ride out. Oh, another good trade. Let me show you guys. This one was from swipe trades that it didn't put us in. It didn't go too low. This one actually, like, by the pip, it hit my buy limit by the pip, and it hit my TP literally by the pip as well. So this is odd cat. So this is the Australian dollar against the Canadian dollar. This is on a 4-hour time frame. If we can see right here on the left side, we have this area of resistance, and then we see that it broke resistance right here. It retested, now became support, retested support, and this thing just freaking launched all the way to the top. It came back and it retested right here again, and it launched all the way back up. So now it started making this little flag. So now this is what I call a bullish flag. You know, a bullish flag or a pennant, bullish triangle, anything like that. We can see that we have very valid points right here. So we did create our base right here. And I was actually looking at it right here. Right here. This is where I got in. And the swipe trade was a little under here. It was a little bit below. It didn't put us in. But I was watching it and I saw that it created this area of support. And I was risking 30 pips. Check it out, guys. 30 pips to make 60 pips. 2-to-1. So on this one, I established my support. I established that it was in an uptrend. I established this uptrending pattern, this bullish flag. And what did it do? It tested the support, and this thing just launched like crazy overnight. And we caught 60 pips on it. Caught 60 pips on this guy, and it broke. So it broke this trend line, as you guys can see. We have this downward trend line, 1 point, 2 points, 3 points, 4 points, 5 points. It broke it, and now it's retesting, and the moving averages are still pointing up. So this guy's would be another valid trade too. So this actually looks like a really good trade. So I would put, again, your 30 pip stop loss right around here, a little bit below halfway of this bullish triangle, or this bullish flag. So you would put your stop loss right below the middle intersection. And again, you could catch it to this next previous high, or to this next high up here. So you would look to take profits at next area of resistance. Always take your profits at the next area of support or at the next area of resistance. You always want to take your profits at those, because you never know if it's going to pull back. Cool. But do you guys have any questions? Does that make sense to you guys?
Yeah, man, I'm good. That's good. That was a big eye opener right there.
Cool. Perfect. Do they have fee, withdraw fee, and how their security? What do you mean by that, Jay? Does who have fees, or JFX?
I was talking about JFX, like if they're in anything, like, because I heard about like Traders Way and things like that, and if they have like any pullout fees, or like, oh, you can't take out a certain amount in a day, etc. That's what I was talking about.
Yeah, let's check it out. So we can go on JFX, the frequently asked questions. It should be on there. So let's see. What is the minimum and max deposits? So If you're doing it on a credit or debit card, the max, does it say? So max is 5,000 US plus 1K per transaction, max 3 transactions per 24 hours, 6 transactions per 72 hours. Wire transfers is minimum is 50, and then the max is unlimited. So you can withdraw and deposit, max unlimited. Minimum is 10 on Skrill, max is unlimited, Bitcoin unlimited as well. So it's a little bit more strict on a debit card, but if you're doing wire transfers, the minimum is 50. On the deposit fees, wire transfers and credit and debit card transactions are 0%. And withdrawal fees. So there are no fees to withdraw your funds back to your debit card. However, your additional profits will incur withdrawal fees depending on the additional withdrawal method below. So wire transfers is $25. Skrill is 1%. Bitcoin is 0%. Does that answer your question, Jay?
Yeah, it does. Thank you.
Yo, cool. Cool guys. So yeah, look at this USD JPY. See how we hit it by the pip, guys? If you guys would have put your sell limit right here, if you would have put a sell limit right here, you would have been up. Let's check it out. You would have been up. Currently, you would have been up like 10 pips. 10 pips. For a lot of people, 10 pips is a lot. A lot of people just trade pure standards. And standards, 10 pip standards is already $100. If you make $100 in a day, that's a 6-figure income. Sheesh. Yeah, so you guys also you guys want to set goals too. Set goals for yourselves. If you guys are trading, like, if you guys are starting to trade on yourselves by yourselves, practice on demo, backtest the strategies. All these strategies, I just showed you, the support, the resistance, all that, it works on every single time frame. But you guys got to understand that depending on what time frame you're trading on, that's typically how long the trade's going to last. So if you're trading on a 15-minute, don't expect the 15-minute analysis to last you days and days, or to give you hundreds of pips in profit. You want to always analyze the bigger time frame so that way you can understand the overall trend of the market, and then start scaling down. So I like to call that top-down analysis, because you start from the weekly. Start from the weekly, go on the daily, 4 hour, 1 hour, 2 hour, then 1 hour, then 15 minutes if you like, and really get those, those good entries. But I typically just trade on 4 hours, 2 hours, and the 1 hour. And I just place my sell limits and my buy limits at these areas. Those are the most, honestly, those are going to be the best probable trades. Cause again, you can only could be risking 30 pips, 40 pips at a really good area of support and resistance. And you can get really, really small, small risk with high reward. And that's what I like. I like risking less, but still having those high reward trades. And then once you're in profit, you just move your stop loss to break even, and you're good. You're golden. Now you literally don't have to worry at all about that trade. But this USD JPY looks really good, actually. USD JPY for the swipe trade, and then the GJ for the swipe trade. Both of those look really, really good. So I'm holding those. So for example, this is the 1 hour. So you see on this 1 hour, we can actually see the data a lot better. You can see the trend line right here. If we move it down a little bit to actually fit this 1 hour trend, we can see that we have points right here. So we have 1 point right here, 2 points right here, third point, 4th, 5th, 6th, 7th, 8th, 9th right here. It broke through with this big candle. Every time you guys see, so this is another thing, another quick tip too. When you see a big candle like this break either a support or a resistance, when you see a big candle like that break it, that's typically a bigger indication that, market still wants to go that way. But for this example, it's retesting. If we draw our Fibonacci from 1 hour, if we pull it down up here, we can see that it's testing the 61.8 area right here. If we draw a little support, a little zone of resistance, little area of resistance, we can see that it touched once, twice, through right here, made a little area resistance. And if we can see it, it's actually making a little like head and shoulders pattern. So head and shoulders, left shoulder right here, the neck area right here, the head, the left, and then the right shoulder right here. And then boom, drop. Do you guys see that?
Yep.
Boom. So it's making like a little head and shoulders on the 1 hour. So this pattern is valid as long as it stays below the 61.8, the 78.6. This pattern is valid as a sell. It did break the trend line, and we see it testing this trend line right here. So it's testing it, popped its head back up a little bit. Like I said, it's not going to be exactly by the line. You know, it's not going to be exactly by the pip that it's gonna fall in line with the analysis. But you want to create zones. You know, you want to create zones. You want to create areas, and then you want to of course justify that with your risk management. So for example, right here, say we enter the swipe trade. The swipe trade was at 152,400. So we entered the swipe trade. It was a 30 pip stop loss and then a 60 pip gain. Let me pull it up real quick. I want to make sure I get the right points. Who took that GBP USD swipe trade yesterday though? That thing was fire. That GBP USD trade, that one was. We're up like 60 pips right now on that one. I can go over that one really quick too. So the stop loss was 152,686. So 152,686. Cool. So you have a little under 30 pip stop loss, and then take profit is at 151,751. So take profit is right here at this next area of support. So this actually looks like a really great trade, a really, really great trade. And then again, guys, oh yeah, one more thing too. So if you do all of your confirmations and you follow your trading rules and everything, makes sense to you, you have a great risk to reward ratio. You have multiple confirmations that tell you, sell or buy. And say this trade does not go your way and you end up losing money on it. Do not, change up the confirmations or change up the style or the strategy or anything. Keep doing what you're doing. Keep doing the same thing. Keep doing the same thing. Keep having the same lot sizes. Keep having the same confirmations. Keep going through the same trading plan, because you're gonna see that over time it's gonna bring you higher rewards. What I always say is you should be able to be losing 5 out of 10 times. So if you take 10 trades, you can lose 5 out of those trades, but you should still be coming out on top of money. You should be coming out positive still. And I'm going to break down the math for you guys. Say you stick with this 30 pip stop loss, right? Say every trade you take, you only have a 30 pip stop loss and you have a 60 pip profit. Say it's a 2-to-1 risk to reward ratio, right? So you're risking 30 pips to make 60 pips on every single trade, and you follow every single trade. You follow the same confirmations. You look for trends. You look for support resistance. You identify divergence on the harmonic scanner, and then you do your analysis on it. If you lose 5 out of 10 times, you're going to be losing 150 pips. And if you win those other 5 times, you're going to be making 300 pips. So 300 pip win minus 150 pip stop or 150 pip loss, you're still coming out 150 pips on top. You're still coming out 150 pips positive. So now you literally only have to be right 50% of the time and you can still make money. So that's how successful traders manage their money, because at the end of the day, I stress a lot, it's your money. You work hard for your money. You do not want to be blowing accounts out here, especially if you don't have the money to be blowing accounts. So, stick to the pattern, stick to the confirmation, stick to the trading plan, and then stick to this risk to reward. Always 2-to-1, always 2-to-1. And you guys should be successful. Just the hardest thing with trading is your emotions, controlling your emotions when it comes to money. Money and emotions do not mix well at all. But guys, if you stick to those training plans, I promise, I guarantee you guys, you guys will start seeing results if you haven't already. But yeah, guys, I hope everything helped. I hope I explained myself pretty good. I'm gonna start doing these trainings every Wednesday. Going over more trades. I'm gonna be going over swipe trades. I'm gonna be going over different trades. If you guys have a specific currency pair that you guys want me to like look over or anything, we can come up with some ideas together. Feel free to mention that. Feel free to let me know. But yeah, guys, dang, we've been on here for an hour already. Whew, that went by pretty fast.
Yeah, that's some good info there, man. I appreciate that.
Yeah, absolutely. Drop an emoji. Drop your favorite emoji if you guys got some value out of that, or drop a one if you guys don't have an emoji. But I just want to make sure everybody got some knowledge, some value. Cool. See a lot of ones in there. See a lot of ones. Great. Fantastic, guys. Fantastic. So I'm going to leave you guys with this. The trades that I'm sticking with right now are going to be a sell on this GJ and then a sell on the UJ for the swipe trades. You guys want to be a product of the product, guys. So, I wait for the swipe trades, and if it comes up on my currency pair, like the ones I study, day in and day out, if it comes out on one of those, for me, it's just an extra confirmation, and that feels great. That feels great when you analyze a pair, and then a swipe trade comes out, and you have an expert that's that sees the same thing you see. That's when you start seeing that you're doing something right. And it's the best feeling. And now you have more of a confirmation, that the trade. That the trade should start doing that, should start selling for this USD JPY, for example. So I'm gonna leave you guys with that, guys. Hope you guys got some knowledge. Hope you guys have a great night. I'll talk to you guys later. I'll see you guys on the chat. But other than that, guys, talk to you guys later. Hope you guys have a phenomenal night. And we are out. See you guys later.